Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everybody, hope you have a good holiday weekend. So last weekend we did a video, Brexit Now What, where we were looking at the reaction to Brexit. It was obviously a very bearish reaction, and we were looking for some bounce opportunities. I highlighted Tesla as a potential first to bounce because of the bearish news that came beforehand. We'll check in there, but just wanted to get an update now that we've seen this bounce play out, and it is a bounce that is astounding a lot of people, myself included. The fact that we've regained all these levels in just 4 days back to where pretty much where we were with the market factoring in a Remain vote. So let's compare the S&P 500 to QQQ here. We had a 2-day drop off about 5-6%, significant downside, and then a bounce with tons of strength. And I can say that because look at these candlesticks, look at the lack of lower wick showing pullback, and look at where we closed the end of the day. We closed up near the high, showing extreme strength. So the difference in today's candlestick is a shortening range. A lack of volume can be attributed to the holiday and traders dipping out early, but the upper wick is showing a bit more weakness than any of these other closes have seen. So it is a lower high as well here. You draw a downtrend line hitting these lower highs, and we're being rejected from that downtrend line. And this is a bearish reversal inverted hammer. The upper wick should be a little bit longer. It doesn't fit the exact definition, but it's close enough to me that that upper wick tells me we're starting to see a little bit of profit taking. And after all of this upside movement, myself included, a lot of people were looking for the turnaround because you look for a lower high, higher low. You look for an equilibrium to be reached after such a significant drop. But the mistake being made is not adhering to what these candlesticks are telling us on the daily time frame, and that's the fact that the bulls are in absolute control these 3 days. So you need to wait to see some bearish signals, and there are definitely indications on shorter term time frames we were looking at. We were looking at the 5-minute and the hourly, but the daily chart is where we had that very clear bulls in full control signal. So the weekly time frame, this close above 2100 is technically significant. We had rejected from 2100 on the weekly time frame 11 of the last attempts. So this is the 12th time we have closed above it. This to me makes it extremely more likely that we see all-time highs in the market in 2016. And that is because that resistance is support for the first time in 12 tests. And we have a couple key levels to watch here. 2120.55, the high of this bounce attempt over the past few months, and then the all-time high 2134.70. So the bulls have all this strength. We are going to be looking for weakness early next week. We're going to be looking to pull back to the 2070s and 2080s, the 50-day moving average and the middle Bollinger Band. Volume will be very telling to see how much of a significant pullback it is, but the bulls certainly proved themselves, and what the market is telling me is that Brexit is not as big a deal right now, and pretty much what the Feds do with rates is going to dictate what our market does. So QQQ, let's compare it here. Same lower high pattern. The difference with QQQ is it's a very clear lower high and lower low pattern on the daily time frame, and for the S&P 500 it's been higher lows and higher highs. So QQQ is coming from a weaker place, and we have that upper wick, the lower high, and the weekly time frame is what I'm interested in because it had a very tight range forming, and the key support was being set at 104.12 down here. That was the low on this consolidation, and then last week we closed below that level. So actually I take that back. We did not close below it, so technically we did hold that low, but dipping well below it indicates that weakness and the potential for a break of this pattern to the bearish side. So because that did occur, and because we closed below the closes that we had on this consolidation, I would favor that we would see a lower high here on QQQ, or at least significant resistance in the 110 area. So the daily chart shows that upper wick, and we could consolidate down to the 106s and 7s, all these moving average supports. But QQQ is going to give a very clear indication of when it goes bullish, if it gets above this 110 area and the previous highs, or if we lose this 100-week support and close below 104. So I'm going to be looking at QQQ to give that indication because it's a lot more likely that we see a break in that range before we see any significant key breaks in the wider range that we have here on the S&P 500. So let's check in on Tesla. We were looking for Tesla to be the first to bounce because we had this bearish news before Brexit even happened, and then the Brexit dump added on top of that. So anytime you have emotion going in one direction and you have traders overreacting, just compounding events on top of each other makes it even more extreme to one side. So the bulls showed up in force, 5 very bullish days in a row, and what showed the strength here is the fact that we gapped down and bulls controlled the entirety of the day to the upside and closed strong. Even though that moving average resistance rejected the price at the high of the day, still a big victory for the bulls with this bullish MACD cross. So we will be looking for a test of these resistances heading into early next week. The gap will fill at 218.81, so we're watching that level as well. No sign of the bears here. We had a bearish reversal candlestick yesterday. Bullish engulfing is certainly negating that bearish candlestick. And this actually reminds me, we covered SWHC last video because we saw a gap down similar buying scenario. Gap down on Brexit. Bulls showed up huge, closed at the high, higher high. That right here let us know that the bulls were in full control. If they can shake off something like Brexit and see a candlestick like that, they are worth paying attention to. And look at how this week played out for SWHC. Absolute monster the past 5 days. Still no sign of weakness. We've got a little upper wick there, but we're riding high, and this upper Bollinger Band is ascending extremely steeply, which is allowing this very strong move over the past 2 weeks. So that indication right there in last week's video led to this strength, and you can see a stock that held up after Brexit certainly is going to reap the rewards of the market bouncing in response. So also with all of this action going on, we're watching gold. And gold on the hourly time frame gave us a very clear bullish signal towards the end of the week. We had this Brexit reaction, the high up at 1362.45, and now we had lower highs forming. And once we hit our low at 1308, we began a little higher low and higher high pattern. So this is when we started paying attention once these higher lows began forming. And then we could still see rejection from this downtrend line, bounce off the support, rejected again, and then the bullish break occurred, I believe, Thursday afternoon right here. Back tested that level and then broke out to the upside. And anytime you have the markets bullish and gold bullish, you know the gold miners explode to the upside, and that's NUGT and JNUG. And that is because the gold mining stocks are obviously a part of the stock market. So when that's heading higher, it's a point in the bull's favor. And if gold's bullish, that's the other main factor in what the gold mining stocks are doing. So if you have both of those scenarios occurring, you get big time movement in NUGT. So look at this move here. We had rejections from the upper Bollinger Band, 1, 2, 3, 4, our last 4 attempts. So when we closed just above it, wasn't a significantly bullish candlestick. It was a close above the upper Bollinger Band, relieving that resistance and allowing for a clear breakout to the upside today. So when we started paying attention in gold, when I said those higher lows began forming, that is when this was occurring here in the 110 area, the lows 110.02, 110.35, and 85. That's when I knew the bulls were establishing a base. Look at the tighter range that formed those 3 days and a key support level holding. So we know after that candlestick, what that says to me is if we break this lower high consolidation pattern on this daily chart, break 117.60, that tells me the bulls win right there. If we lose 110 support and break to the downside, that means the bears win. But you can see the range of the day shrinking on decreasing volume and holding a key level of support. So that let us know move was imminent. It was for the bulls, and golden markets driving NUGT higher, and JNUG's the same thing. Some slight variance between the two in terms of the companies that make up the ETF. But we had a very clear breakout here as well. Upper Bollinger Band is going to be support heading into next week, and if it continues to hold the support, it will drive the price higher very quickly. So the RSI getting above 70. We'll see how strong the bulls can make this move, but certainly a higher high in a higher high and higher low pattern that has been unfolding. So that is what we're looking at here on what to expect next week. Again, weakness anticipated. We're seeing the first signs here. The hourly chart has been very important. We haven't seen the 20 period moving average. Let's actually look at it here. We've got the SPY 5-minute chart. First, I want to point out a key resistance I'm looking at. I saw the price reject from it multiple times today, and that's at about 210.14 and 210.15. The original high of the day rejected from this level. Didn't know to watch it at that point, and it took a lot more rejections to have me note to start paying attention. So we rejected there. Little bounce attempt here. We rejected again, unable to close above it. We broke above it plenty of times, not significantly, but unable to close above it. Right here is when I started paying attention. Okay, 210.15 is a very key level after seeing 3 rejections from it. We pulled back, bounced off the 100 period support, dipped below, and then out of nowhere the bulls rallying here at the end of the day. But look where we couldn't get over. We had very powerful moves here, and the price just kept slamming against these 210 teens and was unable to close above 210.15. And then to top it off, the last candlestick of the day, 210.15 the high before closing down at the low. And let's see the high here after hours, 210.09. So that line, I'm drawing it there and I'm leaving it there, watching how the price reacts to it on Tuesday. And we also want to be looking at the hourly chart a lot. This is a very key level, and we can see the breakout started, or the bounce started, and the 20 period moving average held as support right away, and then it has held as support the entire time. So that right there tells me, after so long of it being support the entirety of the bounce, if we lose the 20 period moving average support on the hourly time frame, it is a technically significant development that would indicate some bearish activity. The MACDs haven't been very helpful for us. They've shown some bearish MACD crosses, and all we do is consolidate sideways, slightly down, bounce off key support, and then hit higher highs, and we just see a bullish MACD cross follow it. That happened twice, on Thursday night, or on Wednesday night, and then on Thursday night. So those bearish MACD crosses aren't giving us the signals for the trend reversal. We're going to rely on this 20 period moving average, and if that is lost, we're looking down at 206.72 as the next moving average support on the hourly. So that is a lot of space in between those two levels. Very key level to watch heading into next week. So that is the wrap up and the rundown of what to expect next week. And it's certainly going to be interesting. There's no doubt about that. Shortened trading will have the weekly charts have lower volume than normal, so we'll have to factor that in as well. I appreciate you watching. I hope you have a happy 4th of July. Enjoy the time off, and see you on Tuesday.